أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد رب اشرح لي صدري ويسر لي واحلل عقدة من لساني يفقهوا قولي الحمد لله الصلاة والسلام على رسوله النبي الكريم وعلى آله وأصحابه أجمعين. Assalamu alaikum everyone, and thank you very much for joining the session today. This is a course introduction webinar on Islamic Banking, Finance and Foundations, Level 2. We are glad to see immense number of participation in the registration, and now I'm seeing the number of the current participation live that is happening at the moment. Level 1 of Islamic Banking and Finance Foundation has already been done in the beginning of 2026, towards the end of 2025 in December, with Brother Abdullah bin Tauqeer. All right. Those who have joined the session 1 already know him very well. And people who are going to join level 2 will know him and Mufti Usama Ehsan, who have kindly agreed to be part of this session and bring knowledge to this session and to this course for the benefit overall. I'll quickly introduce Brother Abdullah bin Tauqeer. He is a Master's in Islamic Commercial Law, a certified IUFI auditor and advisor, and Islamic certified banker from Sibafi. All right, Abdullah bin Tauqeer has been working in the industry for not so long, but immensely and with intense sincerity. All right, he have delivered courses in multiple areas. All right, and then he have taught learners both in Arabic and English. He's also a part of TAIF team, and now we look forward to be working with him, seeing how things have changed from now to moving forward. We have Mufti Usama Ehsan, MBA, CSAA, member of Shariah Board of Bank Alfalah, funding, Souq, and Safwa advisory. As a part of Safwa advisory, Mufti Usama has done his part in the industry, where he have experience of decade Islamic finance, banking in Sharia compliance, product development, digital Islamic finance. He's currently serves as a member of Sharia Board at Alfalah Bank Alfalah Islamic Pakistan, and he is a partner at the Safwa advisory. He has also served as a Sharia Board member of several financial and corporate institutions. I welcome Mufti Usama and Brother Abdullah to this session. Moving forward, I would like to the number of participants, mashallah, is reached there. I would like to ask Brother Abdullah to lead the session from here onwards, and shortly we'll run a poll to see your level of interest and your level of understanding of Islamic finance and banking, inshallah. So over to you, Brother Abdullah. Assalamu alaikum.
So welcome to this webinar, which is an introductory webinar to the course which we are about to start, inshallah. It is actually the second level or the second part of a course which we have already done as a hybrid model. What I mean by that is we had live classes, live sessions, which were mainly presented by myself with a couple of highly respected guest speakers as well last December. And that was called Islamic Finance and Banking, or Islamic Banking and Finance Foundations Level 1. So what we are about to do this summer, inshallah, this very month, inshallah, is the level 2 of the same course, in which we move from a very basic foundation level to a more applied and practical level, in which we will go deeper into the contracts, Sharia contracts used, and the different products which are used generally in Islamic banking. All right. So, as I said, that this course is called Foundations of Islamic Banking and Finance, or Foundations of Islamic Finance and Banking, Level 2, from theory to practice. So in Level 1 of this course, we mainly discussed basic Sharia rules regarding regarding transactions, financial transactions. We discussed why conventional banking is not in accordance with Sharia, and we also discussed what are some main Sharia compliant contracts which Islamic banks use. So, just as an overview, what is Islamic banking or what is Islamic finance? So Islamic finance is not just does not just mean that you have the same products which you have in conventional finance or normal finance. When we say conventional finance, by the way, we mean the financial system which is generally present in the world, which is basically based on or mainly based on giving and taking interest. So in comparison with Islamic finance, we call it conventional finance, or in comparison with Islamic banks, we say conventional banks, which are just normal banks as they are known in the modern world today. So Islamic banking does not just mean that we have the same products which are used by conventional banks and we just give them Arabic names or you just change the names. No, that's not what it is. In reality, Islamic banking or Islamic finance is a whole financial system which is based on Sharia principles. So the change from conventional banking to Islamic banking is not the change in just names. It is a change in the whole underlying principles of the whole system. Is the screen visible? I think someone has said unable to see anything on screen. Is the screen visible for others? Okay, thank you. So basically, what does Islamic finance avoid? It basically avoids all those things which are not allowed in Sharia. They are not allowed in Islamic law, which is riba, gharar, maisir, injustice, unlawful activities, and exploitative financial outcomes. Such systems or such contracts which are designed to exploit the poor and exploit the weak in favor for the rich and powerful. So these are the things which Islamic finance is designed to avoid. And what does it promote? It promotes real economic activity. Now, this is a very important concept that conventional finance, normal finance, which is led by banks around the world, it is basically based on just money, buying and selling money, renting money, lending money. Islamic finance is not based on only money. It is based on real economic activity. And when you will take the course, inshallah, both level 1 and level 2, you will understand that Islamic finance is not giving and taking loans. There is no such thing as a loan in Islamic finance. Islamic finance is all about business, buying, selling, trading, partnership, and so on. So Islamic finance promotes real economic activity because look, when you give and take loans, it's just money which is being traded. It's money which is being transacted in. But when you actually do or use the products which are used in Islamic banks, then it's not just money. Actually, some economic activity is happening because what Islamic bank is doing, it's buying something, buying an asset, or it's putting money into a business. It's trading or it's helping others trade and getting a profit share in return. So I'm not going to go into detail right now because this point is very heavy and very detailed and very important to understanding the nature of Islamic finance. But just keep this in mind that the one of the major differences between conventional finance and Islamic finance is that conventional finance itself does not promote economic activity, does not create economic activity, while Islamic finance is designed to create economic activity. And you will understand this more when we actually go into the different concepts and different products of Islamic banking in the course itself, inshallah. ownership, asset backing, risk allocations, fairness, transparency, and ethical financial conduct. All of these are the core foundations of Islamic finance and Islamic banking. And these might just seem like abstract words or ideas right now, but when you actually take the course and you actually go into detail into each one of the Islamic banking products, then you'll be able to actually see how these principles actually these principles govern all of the Islamic banking practices and products. So in conclusion, in Islamic finance, we have a Sharia structure which is reflected in the actual transaction from start to end. The whole process of everything which happens in Islamic finance should be Sharia based, should be in accordance with Sharia, should be based on Sharia principles and based on these ethical standards, and not just that we take the contract, keep the financial contract as it is, imported from conventional finance and change the name. No, that's not how Islamic banking works. It's actually a whole system which is based on specific rules, structures, and Sharia compliant products. So after this, I'm just going to go over what we have actually already covered in level 1 itself, but this is very important to actually understand the background behind Islamic banking. So what is an Islamic bank? What is a conventional bank? So there are certain similarities between the two. For example, both are called banks. The name is bank, yes. Both are regulated by the central bank. They fall under the hierarchy or the governance system of the central bank. Both offer some services. Both offer some services which are not against Sharia. For example, debit cards, current accounts, bank transfers. As we have discussed in level 1 of this course in detail, some things or some products or services offered by conventional banks are not per se against Sharia, like debit cards, current accounts which don't have interest on them, and banking transfers. These transactions are normal transactions which are allowed, which are permissible in Sharia. So, and both Islamic banks also offer them, conventional banks also offer them. And both to a certain extent engage in trade and investment in the economy, albeit in different ways, as we will see in more detail when you actually study the different Islamic banking products. But what is the main difference between Islamic and conventional banks? Why do we need, if there are so many similarities, then why do we need an Islamic bank? So first point, which is the most important point in all of Islamic banking, is interest. Interest is not allowed in Sharia. You cannot give interest, you cannot take interest, you cannot even, in Sharia, it's not even allowed to sign a contract which has an interest clause. So like, for example, if you are a shipping company, sorry, I was just looking at the chat. Inshallah, we'll do a question and answer session at the end of the webinar. So inshallah, we will take questions at that time, inshallah. And if possible, Brother Ahsan, maybe you can have a Q&A tab as well. So, or up to the attendees, they can ask questions through Q&A tab or through the chat box. Both are fine. So I was saying that in Sharia, it's not even allowed to sign a contract which has an interest clause. Let's say, for example, you're a shipping company and you sign a contract for a shipping fixture, for example, and your charterer or the ship owner who you are dealing with, they add an interest clause that in the case of late payment, for example, we will charge 5% of interest. Signing the whole contract is haram in Sharia. You cannot sign this contract. You have to say to your to the other party, please change this part in the contract. So signing a contract which has an interest clause is not even allowed in Sharia. So in Islamic banks, the main thing is no interest. This is the most important point in Islamic banks. Second thing is conventional banks, they finance their customers, their clients by the method of loans. They give money and charge interest on that money, of course, because they're not going to give away money for free. But Islamic banks, because interest is not allowed in Sharia, instead, so they can't give loans because it makes no commercial sense to give an interest-free loans, because at the end of the day, Islamic banks are not charity organizations. They are money-making companies. They are profit-making companies. So you can't give loans with interest because that's not allowed in Sharia. You can't give loans without interest because that won't make you any profit. So what Islamic banks do instead of giving loans is that they don't give loans at all. They use instruments which are based on trade or partnership or a combination of the two, as you will see inshallah when you go into more detail in Islamic banking products. Also, Islamic conventional banks, when there is a saving account in a conventional bank, it gives interest to the account holders. But Islamic bank, of course, cannot give interest. So instead of that, savings accounts in Islamic banks are based on mudaraba, or in some cases wakala bil istifmar, and the account holder, the depositor, gets a share of the profits of the bank, as you will see in more detail inshallah, or those who have already done the first level of the course with us have already seen. And one more very important difference between Islamic banks and conventional banks is that we already saw that both fall under the umbrella or under the governance of the central bank. But the difference is that Islamic banks are also regulated in terms of Sharia. So there is a double regulation. Conventional banks are only regulated by the central bank for banking regulation, but Islamic banks have a double regulatory system. They are also regulated by the central bank, and also they are regulated by a Sharia body, and the Sharia body are of different ways. In some countries you have Sharia boards in the central bank itself, or Sharia departments of the central bank which regulate Islamic banks by in terms of Sharia compliance, and in other countries you don't have that. And this inshallah we will look into more, what is the difference in Sharia governance across different jurisdictions. This is actually a part of the upcoming course inshallah. So in the last level of the course, we also discussed a short history of modern Islamic banking. So basically, as we know that the modern financial system, it has swept over the world in the last 200 years or so, even though actually banking is much older, but the modern financial system, which is an interest-based financial system, has taken over or swept across the world in the last 1 to 2 centuries. So Muslims, Sharia scholars, and also normal Muslims who, or the general public of the Muslims who don't want to do anything which is against Sharia, they started to think of a way to be able to actually enjoy these financial services offered by the financial system without doing anything against Sharia. So for most of the recent past, like the last 2 centuries, practicing Muslims would not keep their money in banks, would not actually even use banks because banks are against Sharia. But of course, because of how deeply rooted this financial system is in our everyday lives, many people have no choice but to use the financial system. But the financial system and the financial institutions are against Sharia. So what could they do? So the scholars and Sharia scholars and practicing Muslims, they tried to come up of alternatives. And one of the first modern alternatives to this financial system was made in the 1950s in Pakistan, and then in the 1960s and 1970s in Egypt, where the some models or some experiments, so to speak, of interest-free banking were actually introduced. So, for example, the very famous example of saving banks in Meet Ghamar, the village of Meet Ghamar in Egypt in 1963, which actually got around 59,000 depositors in just 3 years, because of the inclination of the general public to actually put their money in Islamic and Sharia compliant methods of savings. And then in 1972 we had the Nasser Social Bank in Egypt, which was also non-interest based. But unfortunately, yeah, so unfortunately these experiments were not successful in the long term. In the 1960s, the agricultural banks in Pakistan closed down. In 1967, just 4 years after its introduction, the Meet Ghamar banks also closed down, and the Nasser Social Bank also did not remain how it was at its inception. So, even though these early experiments were not successful, the Sharia scholars and economics, the Muslim economic scholars, they continued to actually try to find ways to find an alternative to the to the non-Islamic system, or the interest-based system, which was prevalent and is still prevalent throughout the world. So uh, especially throughout the 1960s, 1970s, you see, if you are in academia, you will see a large number of research papers, PhD theses, books which are written about Islamic economics, interest-free banking, many books with titles like Bunuk Bila Fawaid, Banks Without Interest, interest-free banking, and so on. You can actually just do a Google search or a search in research articles, and you will find 1960s and 1970s are full of these types of researches, because the scholars wanted to make and were trying to make actual interest-free alternatives to the interest-based system. So all of this research was conceptual for a large period of time, but in 1975, two things happened which actually changed the whole picture. 1975, the Islamic Development Bank in Jeddah in Saudi Arabia opened, which was basically formed by the OIC, the Organization of Islamic Cooperation, which is a global body of Muslim countries throughout the world. And in 1975, the Dubai Islamic Bank was also established. It was the first ever modern Islamic bank which were consumer facing and offering products to consumers and to clients who wanted to get financing or to invest or save their money in accordance with Sharia principles. And then after that, 1970s, 1980s, we had a large number of Islamic banks throughout the Muslim world: Egypt, Sudan, Kuwait, Jordan. And then in 1978, the first Islamic bank in Luxembourg in Europe. And then we had the Islamic Finance House in 1981 in the UK. So as we see in the late 1970s and early 1980s, this new experiment of Islamic banking actually spread across the world, because people saw that not only is it possible, it is actually beneficial for society as a whole, and also it has the potential of being a very big sector in the financial system. By 1992, there were more than 90 IFIs, Islamic financial institutions across the world, 55 Islamic banks, 34 Islamic investment companies, 3 Islamic holding companies. And today, there are over 500 Islamic banks. So we have just last year they called it the golden jubilee of Islamic banking, because the first modern Islamic bank was founded in 1975, and now it was 2025, so 50 years of modern Islamic banking. And the biggest achievement of that is the large presence of Islamic banks, over 500 in over 70 countries. And not only do we have Islamic banks in Muslim countries, we also have many Islamic banks in non-Muslim majority countries such as the UK, South Africa, and Switzerland, and so on. So it is Islamic banking today is an integral part of the global financial system. The asset value of Islamic finance has just crossed around $6 trillion worth of assets, and It is a very big sector of the global financial system which cannot be ignored by anyone. So this is an achievement which Islamic finance has made. Having said that, this does not mean that Islamic banking is without its problems. There are many problems in Islamic banking. There are many issues in Islamic banking. There are many things in Islamic banking which need to be changed and which are very commonly and very frequently discussed by scholars and by professionals in conferences and forums across the world. And inshallah, when you actually take level 2 of this course, we will have inshallah a guest speaker, and he will actually be talking about some of these issues and how Sharia scholars or how Islamic banking professionals can address these issues. Also, there are some international bodies of Islamic banking which have been made over the years, like IOFI, which is an acronym for Accounting and Auditing Organization for Islamic Financial Institutions. It actually sets accounting standards, governance standards, and Sharia standards for Islamic banks and for other Islamic financial institutions. And then you have the IFSB, the Islamic Financial Services Board, which actually makes regulatory and supervisory standards for Islamic financial institutions. More of this, inshallah, will be covered in the course. So I hope to see you there. And with that, I'll pass over to our very respected Sharia scholar, Mufti Usama Ehsan, who is, as Brother Ahsan already introduced, Sharia board member, and he serves on the Sharia boards of multiple Islamic financial institutions. So this was just an appetizer. So for the main course, I pass over to Mufti Usama.
جزاك الله خير. بسم الله الرحمن الرحيم. إن الحمد لله والصلاة والسلام على رسول الله. أما بعد. جزاكم الله خيرا for everyone who has joined in, inshallah, and big thank you to TAIF and dear brother Abdullah, who invited me to be a part of this course. And I hope that, inshallah, definitely I'll be learning something from the participants, and I hope that they will also benefit from us, inshallah. And I think that in any field, that is the way to move forward, where there is learning happening from both sides and people sharing their experiences. So I hope that since this is an advanced level course, we'll be able to we'll be able to discuss more than just the academics and the theories, and rather discuss the specific points that relate to the application of Islamic finance, Islamic banking. So I just want to go over firstly, the global scenario, the main sectors of Islamic finance at the moment, the global snapshot that we have of Islamic financial sectors and their current state. Afterwards, we will move to and we will try to discuss some of the reasons why an advanced level course, especially which focuses on the application of the theory and the application of the academic learnings, is very important, especially in Islamic finance. I mean, that's a reality and necessity in every field, because any student who graduates from an institute, with an undergrad or even a master's degree, unless and until they have worked in a work environment where they get to see the real life application of their learnings, they're not able to truly understand, or they're not easily able to relate to what they've learned to practical life experiences. So inshallah, we will discuss this as we move forward. So if we have a look at Islamic finance, when we speak about Islamic finance, it's actually divided up in 6 main sectors that are in front of you on the screen. Firstly, we have Islamic banking, which is the largest, and we will discuss why Islamic banking, or at least I'll share my thoughts and as to why I think that I believe that Islamic banking is the largest sector out of Islamic finance. Then we have Sukuk. Sukuk are basically debt market instruments, although in Islamic finance they are based on equity and they're based on risk sharing, but generally they are listed and considered as debt-based or debt market instruments under the capital market. Under the capital markets. Then we have Takaful, which is a Sharia compliant cooperative insurance, which is basically a Sharia compliant or Islamic alternative to insurance. Insurance has some ills and some prohibited elements, and takaful, because the concept, just like the concept of of banking, is something which is not inherently against Sharia and which is not inherently prohibited by Sharia. Similarly, takaful is also a very good concept. Is a concept about mutual help. It's a concept of helping each other and helping the people who are in need. So but the mode and the process which was used, obviously, that had prohibited elements such as riba, it has gharar, it has other prohibited elements. So because of that, the scholars presented the alternative, which is takaful, and that is also one portion of the overall Islamic finance industry in the market. Then we have Islamic funds, which are investment funds. Mutual funds are also known as mutual funds. Funds which invest. You have pension funds which fall under this. We have 401ks in the US, and similarly other funds which are private equity can also sometimes operate through a fund. You have hedge funds. I mean, of course, that's another whole different level, and that's entirely another ball game. But these Islamic funds, basically, they invest in Sharia compliant securities, Sharia compliant equities, and of course the screening is performed. The Sharia screening is performed in order for them to be investing in the right and halal sectors and businesses. The Islamic capital markets, and of course the Souq and Islamic funds actually fall under this. And then you have other products which are also similarly structured. So that's also a big chunk, a huge chunk of your Islamic finance market. Then we have Islamic microfinance and fintech. Of course, fintech is an up and coming field where P2P crowdfunding, peer-to-peer funding, crowdfunding, and there's other types of different modes which are being used. And I think that's fintech is where Islamic finance can really and truly shine, because that's where the true risk sharing can actually happen. And we will, of course, discuss this during the course of, inshallah, our discussion and complete course when we move onwards. So if we can move on to the next slide. Here we will discuss the current situation so globally, of course, Islamic finance is available in Muslim majority countries. Of course, it's there. And then even in some of the non-Muslim countries, if you go look at the UK, you have, for example, some companies which are offering halal car finance. And in the US and Canada, there are some companies which are offering halal home finance, because generally in the West, the major issues that Muslims face are one to do with home finance, because home finance generally is not based on Sharia compliant principles, and it's difficult for people to find halal alternatives. And then, of course, car finance is still secondary, because you can save up and buy a car maybe in a few years' time. But to buy a house which costs $200,000-$300,000, or maybe a similar amount in pounds or euros, that's not really something which is feasible or doable. And then to live your entire life on rent, that becomes a huge problem. And then you have some neo banks, some challenger banks, digital banks, which are also offering investment accounts, Sharia compliant investment accounts for consumers, Muslim halal-minded consumers in these Western countries. Banking, as far as banking activities are concerned, of course, so you have full-fledged, full suite Islamic banks. When you look at Malaysia, the GCC countries, in Pakistan, and you see them, they're offering full-fledged, and they of course, you have success stories. You have stories that are just basically case studies in how Islamic financial institutions became the forefront leaders of Islamic finance. And then you have treasury products, investment products, home finance, basically consumer, corporate, SME, MSME. You have all of these sectors which are being catered through banking activities. But of course, as I mentioned earlier, referred to it earlier, that there's uneven development. As I said, banking has overtaken sort of everything, and banking is like the largest sector that you have. Is about 70% of the entire. So Islamic finance, if it's 100%, about 69.3% or 100%. Sorry, 70% is just Islamic banks, and then Sukuk are another 20%, and then the remaining basically 10% or 20% is divided between the Islamic funds and Islamic takaful. So sorry, the last 10%. The last 10% is divided between these two. So the examples of mature or active Islamic finance ecosystems I mentioned to you, Malaysia is quite ahead. They have some very innovative and new products. They have some social Islamic finance also happening. That is actually another sector of Islamic finance, which is sometimes ignored, which is social welfare Islamic finance. So how Islamic financial tools can be used for social welfare, for the benefit of the people. And then in Saudi, they're also trying to under the Vision 2030, they're trying to promote SMEs, and in order to get financing for the SMEs, you need fintechs. So there's fintechs which are working on different initiatives. Banking is, of course, there. I think last time I checked, it was 77% of their banking was based on Sharia compliant Islamic financial institutions, Islamic banks. But other than that, of course, fintechs and this space, there's a lot happening there. In Pakistan, we have the governments and the federal Sharia courts decision to convert and to complete the conversion by 2028, or at least move towards it. So that's happening. Tauqeer is moving and doing a lot of things. There's gold banking. There has been experiments of gold banking that have happened there. So these are mature Islamic financial ecosystems. Of course, none of them is 100%, but I think things are moving towards the right direction. Main challenges, of course, standardization. So there's standardization in two aspects. One is from the regulatory authorities, and the second is, of course, from a Sharia perspective. But I think the Sharia perspective standardization is necessary everywhere. I think there is a beauty in having a difference of opinion where different jurisdictions experiment with different opinions, and then we find out that, which opinion, sometimes some opinions, they result in better products which are more suited for the rest of the world. So, but generally there are issues with standardization. AOFI is not, as referred by Brother Abdullah, AOFI is not adopted completely everywhere. In some countries it is, in some countries it isn't. Then you have Sharia implementation issues because when you at times when the conversion is forced by the government, then at times you have people who are whether Islamic finance professionals and bankers who are not willing to convert completely, or who are not willing to implement Islamic finance in its true spirit. Then they try to look for loopholes and try to find ways to basically mimic and replicate the conventional instruments and the conventional transactions, which of course isn't good, because then it undermines the spirit, it undermines the true nature of Islamic finance. Liquidity management issues still exist. Generally, Islamic finance financial institutions have more money than they can deploy. They don't have avenues to deploy, so that's still a challenge. But of course, with the up and coming Sukuk issuance, I think that issue may be, hopefully you'll be able to resolve that as we move forward. Sukuk structuring, once again, it's a difficult task, because every business, every jurisdiction, every market has their own norms. They have their own standards and practices. So that's something that we need to always look into. Governance and documentation, regulatory differences, as I mentioned, those under standardization, they exist. So these are some of the challenges. Of course, I mean, some are more important than the others, some are more crucial than the others, but these are the challenges that exist in the market. So moving on to the next slide, which basically addresses, which basically tells us what is the size. So as I mentioned, that overall Islamic financial services and industry up till 2025 third quarter, it was around 4.4 trillion US dollars, which is a huge amount. And then the year-on-year asset growth is 13%. And as I mentioned earlier, the Islamic banking share is 69.3, and Sukuks have I mean, there was, especially during COVID, and because of COVID, there was a sort of a break in the pace of Sukuk issuance, and because of that, it slowed down, but alhamdulillah, this past year, it crossed 1 trillion sukuk issuance, which is basically sukuk's outstanding at the moment. So that's a big milestone for sukuk to hit. So industry is quite large now. I mean, as I mentioned, in Saudi, it's about 77%. In Malaysia, it has 35% market share. In Pakistan, is about 25% market share. So in different countries, it's growing. It's becoming significant to the extent where it can't be ignored anymore. Islamic banking remains the dominant sector, and the rest of them we've discussed. Let's move on and in the next slide and discuss why is Islamic banking the largest. Okay, so we've generally discussed this. This is just a visual representation of what we discussed in the last slide. We can move on to the next one. Okay, so this shows globally where Islamic finance is more concentrated. So it's obviously GCC being Muslim countries. That's where you have the main concentration of it, and then you have East Asia Pacific, where you have Malaysia and all of Indonesia and all of these countries. That's where you have the second 21% of the concentration there. And then moving onwards in South Asia, Southeast Asia, you only have Pakistan, which has sort of a robust or a working Islamic financial ecosystem. So naturally, that comes quite far behind. So this is generally the highlight or sort of a view of where we see the Islamic financial activity the most. But of course, it is growing, and as it grows, inshallah, we have hopes that in other places we'll also see improvement. So moving on to the next slide. So yeah, this is what I was speaking about, that why Islamic banks dominate, because naturally, I think historically, if you look at it, I think these were banks were the major institution which was using riba and interest-based contracts and accounts even back in the 70s and 60s. So that's where Muslims and Muslim countries started to look towards Islamization and halal alternatives to banks, and that's where it started from. And of course, bank is such a crucial part of the economic system, especially the modern financial and economic system, that it is not possible for someone to live in a country and entirely ignore banks. You have to make payments, you have to save, you have to, even safeguard your funds. Even the salaries and funds are credited in your accounts, whether it's individuals or corporate facilities. So it's not really possible to ignore it. That's why banking, of course, dominates, because that is where it started from, and that is the first portion which was sort of Islamized. And of course, it is still one of the most important parts of the today's economic and financial system, and of course every single one of us interacts with it. Secondly, sukuk is obviously important for raising funds. It's an alternative to conventional bonds. So whether it's governments, whether it's large corporates, whether it's MSMEs who are looking to raise capital, or even fintechs. There are fintechs who are looking to raise capital, and they look towards sukuk, especially if they're Sharia compliant and Sharia minded. Takaful, unfortunately, is smaller. I think it has one of the biggest, couple, I think. One is because some scholars have do hold the opinion that conventional insurance, there is permissibility in using it under the frameworks of darura and haja, but that's of course their opinion. So I think that's one reason the adoption of takaful has been much slower. And secondly, then there's that big issue of takaful and exposure, basically taking on the exposure. So as you know, that takaful companies, they need to basically get takaful for themselves, their own portfolio, through a re-takaful company. And generally what happens is that such re-takaful companies are not present, who can cover the exposure of these of these portfolios. So it's sort of a chicken and egg problem. Takaful companies, re-takaful companies say that there isn't enough business and takaful companies are not willing to go to re-takaful companies are not willing to expand their pool size because they believe that there isn't enough business on the ground, and the takaful companies on ground or on the consumer level are not willing to increase their portfolios because they say that, or take on extra exposure because they feel or they believe that there aren't enough re-takaful opportunities. But this is a big industry, takaful. I mean, there's so many things. There are so many types of insurance that are happening in the world, but there is no takaful alternative available, which is really unfortunate. So we hope that this grows and it becomes a mature market eventually. Microfinance, of course, that's very important because it caters to the weak, financially weak. It caters to that segment to uplift it and provide it stability, and it aligns more with the financial goals of Islam and Islamic finance in general. But microfinance is also happening, although not at the same pace that we'd all like to see, but it still exists, and there are opportunities in there also. So moving on to the next slide, inshallah. This basically the next couple of slides relate to why this level 2 implementation course, and of course, hopefully, inshallah, level 3 course is necessary, because process, in one word, if I were to say in one sentence, process matters in an Islamic financial transaction, right? So that's why documentation is very important in Islamic finance. It is very important in Islamic banks. It is very important in all the sukuk and the sequence of their execution. In conventional finance or in any other field, you can just basically have the whole bundle of documents signed on the first day and it won't make a difference. But for Islamic finance, you need to ensure that every single document is being executed at the right time. If it is not, then of course it leads to Sharia non-compliance. It leads to transactions becoming invalid. So that's why, because the process is so important in Islamic finance and generally in the Islamic tradition and Islamic fiqh. So because of that, it's very important that documents are treated, and to understand at which stage do we execute the document. So let's suppose if you studied how murabaha works and how what is a murabaha and what are the rules of murabaha, but the thing is, the on-ground implementation might be different from what we've learned in level 1 and how we've learned it from a theoretical perspective, from an academic perspective. So we need to understand, and then the implementation of murabaha becomes different in every transaction. In every segment. So if you have murabaha happening through letters of credit in LCs, that's going to be totally different than the murabaha, the commodity murabaha you might see happening in tawarruk transactions. Or the murabaha that's happening in corporate transactions might be different from the murabaha you see happening in MSMEs, or the ones or the murabaha or musawama you see happening on a fintech website platform. So roles keep changing according to the underlying principle. The underlying transaction, the way those transactions are actually executed on the ground, the norms of the market and the norms of the financial businesses, and of course the financial institutions dealing with them. So you might find that the same murabaha transaction sometimes even in the same segment is executed differently from one bank to the other. And the reason is, of course, because some banks have some extra regulatory requirements. Some banks are more focused on some specifics. Their regulations, they follow regulations, or their interpretation of the regulation is a bit more stricter than the interpretation of the other institution. And because of that, we find that same murabaha, same musawama, but in different, let alone different jurisdictions. In the same jurisdiction, different banks and different financial institutions will be doing it differently, right? So, or sometimes there are challenges that come up in different financial transactions, how they are being addressed in LCs. For example, in import transactions, there's a big issue if LCs which are open on the basis of murabaha, and if the if the goods arrive before the arrival of the documents, then at that time you perform murabaha, but you don't know what the dollar rate is going to be when the documents come in. So how are you going to price the murabaha today when you're not sure what the dollar rate is going to be when the documents come in later on? So these are just some reference to some of the challenges that are faced in different jurisdictions in different institutions, and that's why a practical implementation course is very necessary to understand these. So moving on to the next slide. So for example, you have a problem, then you have the different principles that you studied, and then you have the products which are different. So you might have studied the first three, but when you come into the practice where the documentation, the approvals, how qabz, how possession is established in different transactions and different contracts. That's also, so basically, as the statement says, the level 2 starts where the textbook explanation becomes a banking transaction. When it starts to become, when you start to execute it on the ground and according to the ground realities. We face a lot of questions in many trainings from the trainees and from the audience, which we feel would never come up if they had practical experience of the transaction we're talking about. So they would probably come up with the same solution that we were presenting, but they won't accept it because they've never dealt with it themselves. So basically having lack of experience of actual transactions. So moving on towards the last slides. So basically the bridge between level 1 and level 2. So what we are trying to do is the product implementation and the practical implementation of all what we've studied in level 1 is going to, how it's going to be happening. That's what we're going to be discussing level 2. So we're going to discuss the constraints and the restrictions that a murabaha transaction might face when it comes down to the execution level, when it comes down to facing a customer, when it comes down to different regulatory hurdles. In the West, one of the biggest challenges comes up is taxation. So if a bank or if a financial institution, even if they agree to finance a house or a product, they're not willing to purchase it because they'll have to pay additional sales tax on it, right? So that's a regulatory hurdle. How do we, yes, of course, one way is to go to the regulator and request them to change the law or change the regulation, but that might take 5-10 years. How do we overcome and work around these challenges while ensuring that our murabaha is still Sharia compliant and is still according to its basis and principles, right? So I hope that I've been able to communicate the gist or the objective of our upcoming course and what we're trying to achieve, inshallah. And I think if this is the last slide, I will end my talk here and open the floor for discussions and hand over the stage to the hosts, inshallah.
Assalamu alaikum. Thank you very much, Sheikh, for your presentation and completely showing the bridge from how transformation from level 1 to level 2. There are certain names that I can see here. They are from level 1, and I welcome you again that you have joined the level 2 sessions, already seeing interest and some of the messages that came to me. I'm thankful to you for having trust in TAIF. I'm thankful to you for feeling the need. There are a few people I've seen, they are already Sharia advisors. Mashallah. I'm not taking the names, but I'm glad that they have joined and they have agreed that they are going to join the course. So I'm very happy for that. Before we take the Q&A, there's a Q&A tab. I would request everybody to type their Q&A in this. And we are going to announce discounted prices for the people who want to join both the courses, level 1 and level 2, 33% discount who want to join level 1 and level 2 both. All right. As a matter of fact, people who are already a part of TAIF can have a discount on the course that exists Level 1 course is a self-study course. However, it's guided learning, means in case if you are taking the course as self-study course and you have any questions, you can ask in the discussion panel in the TAIF learning system, and you can have your answers right there and then. In this session, we will be having Mufti Usama also with us, who will be taking you from the practical approach together. So the Q&A is open. While you're posting your questions, I will quickly run a small poll to see the interest of the people. So far, what is the interest of the people, how they have seen it so far. So kindly, your feedback is very important for us to know, and we are excited to see your interest in the course. Again, there is no commitment here. Just show your interest. Means doesn't matter. Means if you want to do this course, if you don't want to do this course, your interest matters to us. That gives us an opportunity of learning. That gives an opportunity for realizing that people who have joined the session see the need of such a course in the industry, and we are on the right track. So the poll is in front of you. Kindly quickly respond to this so that we can take the Q&A. There are questions already coming in the Q&A sessions. Thank you very much. Thank you very much for your feedback and the enrollment interest. This is not a commitment to your enrollment. Do not worry. Just poll that gives us motivation of knowing ourselves. Are we doing the right thing or not? So polling doesn't mean that you are 100% enrolling. It's just for us to see what's the feedback of the audience. Thank you very much once again. All right. Thank you very much. Jazakallah. People who have already polled, I would request to them start posting the question in the Q&A tab, and we will take the next 15 minutes to answer those questions. I will also send the link of the course to the link of this course. What do you call, so that you can see this course at TAIF's website, and in case if you want to register for both the courses, if you're already part of level 1, then you can go and get level 2 at a discounted price. All right, so I'm going to end the poll now. Inshallah, I'm going to end the poll now. Thank you very much. Here you go. In the chat, I have put this link. Please take a look at this. And Brother Abdullah and Mufti Usama, please, you may take the questions accordingly. Whichever questions that you seems best to answer, inshallah.
Yes, I think couple of the questions was regarding something which I had discussed. In one of the slides, I explained that some similarities exist between Islamic banks and conventional banks, and there are some activities or services offered by a conventional bank which are not against Sharia. And one of the examples which I gave was current accounts. If a current account does not bear interest, does not give interest to the depositors, then such a current account is not considered against Sharia. That's why Islamic banks also offer current accounts in the same way. Islamic banks offer current accounts and they do not give any interest to the depositors. So this current account product or service which is offered by Islamic banks is identical to the one offered by conventional banks. However, this does not mean that it is allowed to, in Sharia, to open a current account with a conventional bank. This is a separate thing. The product is the same, yes. That current account, non-interest bearing current account, is the same or identical in an Islamic bank and also in a conventional bank. However, it is not allowed to open, if you in your country have access to an Islamic bank, then it is not allowed for you to open a current account, even a current account in a conventional bank, according to most scholars, for another reason. And that reason is not that because it gives interest. There is no interest in current accounts. If there was interest in current account, then it's not allowed in Sharia in any circumstance. But if the conventional bank offers a current account without interest, then still, according to most Sharia scholars, it is impermissible, because if you will give money to the conventional bank by ways of current account, then how does a current account work? A current account isn't that you give money to the bank and the bank is going to keep your money in a safe or in a box. No, the bank is going to use that money for its own, as its own liquidity, in order to be able to operate. And how does a conventional bank operate? It operates by giving interest based loans. So your money in a conventional bank is going to be used to operate in a non Sharia compliant manner, which would make you guilty of helping this non-Sharia compliant, or this haram transaction to actually occur. So for that reason, it is not permissible, according to most scholars, it's not permissible to open a current account, and obviously not a savings account, because savings account have interest on them, in a conventional bank, if you actually do have any alternative available. So I hope that point has been made clear. A couple of questions I think are a couple of questions are regarding some admin related issues. How can I participate in level 1? So level 1, as Brother Ahsan has said, it is available as a self-paced course on the website, and I think Brother Ahsan is going to share the link as well. And yes, so if Mufti Usama wants to say something, inshallah, let me pass the mic over to him.
Yeah, I think you've covered the main point basically.
All right.
Jazakallah. Thank you very much for the session. If there is any questions, if somebody wants to ask, we are here for next 3 minutes or so, inshallah. Thank you. And I've sent the link in the chat. I've replied the link as well. You will receive an email as well. taiflearning.com. You can go there. The course is available to register. These classes will be live classes. Course outline and curriculum is already there. Let me just quickly share my screen and share this with you as well, so that you all can have a look at that. I think that'll be more, yeah. I think let me share my screen to just a quick. So yes. Is my screen visible? Yes, my screen is visible. All right, in this screen, you can see that this was a free orientation session available for you. All right, regularly, price is mentioned, 15 days remaining, the course will start. You can use TAIF Early Bird as a 20% discount for this course. All right. Further to that, if you want to take both the courses, you can take both the courses at 550 AED. You can see level 1 was delivered by Brother Abdullah bin Tauqeer. Now Islamic Banking Finance level 2 will be delivered by Mufti Usama and Brother Abdullah. Here is in front of me, you can see a little bit about the course, how the level is delivered. Live classes will be level 1 is recommended. People who already have an understanding, they don't have to do level 1, but the reason of giving this suggestion is to build an understanding with the trainer, how they have taught before. People already join level 1 will be able to take level 2 as well. This is the timing of the class, what will be discussed in this course, and how it will be discussed, what will be the days. It will be working days from Monday, Tuesday, Wednesday, and Thursday, inshallah. The importance of this course, and we look forward to seeing you. So in case if you want other people to do this course, please do share this link with others. There's a complete detail of this. This will be shared with you as well. And I would like to thank you once again for joining the session and giving time on a Sunday So that shows how much committed and your interest when it comes to learning and development, self-development. Certificate for this course and level 1 and level 2 is a sample certificate over here. You'll be available, inshallah. Okay. Thank you very much. I don't see any other questions there. How can I participate in level 1? Also, I'm planning to enroll in CPSSC page. December, inshallah. Can you guide me? Yes, brother. Inshallah. So in this context, I'm sending you the link again. All right. Please follow the link. All right. You can contact us on our WhatsApp as well in case if you want further information. CPSS and CPH details are also available at the website. If you need anything specific, because all the information will be available there. In case if there is anything specific that doesn't satisfy you, inshallah, our team will be available to answer all those things. Okay. Once again, thank you very much for your time, Mufti Usama. Thank you very much, Abdullah, for your time. And thank you, everyone. Without you, it is impossible to conduct such sessions. Presentation of this will be shared with you. This orientation of session will be available on the course page itself for free to watch again. You can enroll for free and see this presentation again one more time, inshallah. Assalamu alaikum wa rahmatullahi wa barakatuh.